Hey guys, this is Jason from Nova Home Loans, and I got Joe Laney over here from Realty One.
What's up, guys?
And we want to talk a little bit about building like generational wealth for yourself and your family. And there's really no better vehicle than, I would say, real estate. What do you think, Joe?
Yep.
It's proven. Real estate is something that we're not going to get any more of, and it's basically going to be less and less and less, just like we can see in our market right now with low inventory and high demand with super low rates. And that's why we want to talk about this. Joe, a lot of people think when you are vacating a residence and say you want to rent that one out that you got to put 20% down on the new property. That's not true, is it?
Nope.
You can actually do the minimum, right?
5%.
Yeah, 5% down on that. So you can literally do 5% on the new property when you're buying that. You don't have to do the 20%. And you're vacating residence, we can use a lease agreement on that and use 75% of that amount to apply towards your income, which 9 times out of 10, rent is always higher than mortgage, just so you guys remember that out there, buyers, it cancels out that mortgage payment. So realistically, that mortgage payment is not even hurting you in your debt to income ratio to qualify to purchase the new property. And now we're seeing homes. How much are homes appreciating by right now, Joe? What would you say?
It varies by area, but I mean, I've seen some areas go up, 10, 12% in like a few months, just because of people paying over. And as soon as those close, now appraisers are using those as comps, because it doesn't matter whether they're cash and whatever it is, even cash buyers are paying over. Deals are closing, and those are new high comps for the area. So, and that's what appraisers are using. So yeah, I mean, everything's appreciating. And on the rental side, he was talking about converting your house to a rental and then buying a new house, so you can cash flow your old house. Well, we're the #1 rental market in the country. Inventory is low. And compared to what you get for buying a house, I mean, you don't quite get as much because the rents are pretty high here. So, good chances we could find you a place where the numbers kind of work out as far as your cash flow and everything looks good for you to move to the new place and, start stacking your properties to create that, generational wealth, retirement plan, whatever you want to call it.
Let's talk a little bit about the numbers. Make it real simple. We'll talk that. Let's say you have a house that is worth $300,000. You want to buy another house that's $300,000, and say the appreciation is 9% that year. So what is that? $27,000 in profit you're going to make on that house. If you rent that house out and somebody's covering your mortgage payment, and we're not even going to count the extra money you're going to make on top of your mortgage with the rent, you're going to make $27,000 by having somebody else pay your mortgage payment. And on your new property, you're going to make $27,000 of equity on that one by owning that, because if you didn't own that, you wouldn't gain $27,000. That means, what if I were to tell you that you could put away $54,000 a year for the next 10 years and have $540,000 saved away in equity?
Yeah.
Easy math. And I guarantee you that it's going to be more than $54,000 a year, because every year the value of that house goes up, and then that interest compounds on there that gives you value. You could literally have close to $750,000 or so in equity in a property in 10 years. That's generational wealth.
So kind of to enforce what he's saying, there's actually a graph you can look up. It's called the Case-Shiller Housing Price Index. And if you look over time, there's always going to be, corrections and ups and downs, but over time keeps going up. So, real estate is a long-term game. If you buy and hold, that's the proven winning strategy. You don't make as much percentage-wise as some of these speculative things like flips or whatever, but if you want a steady, tried and true plan, buying and holding, riding out these things, over time it's going to go up. And that's where you make that money that he's talking about, because as things go up X%, but your price has gone up, it's going to go up X% of that higher price over and over and over again. So,
well, that's how you create generational wealth, guys. And if you want to talk to one of us about that, please reach out. Joe will get you over to me, and we'll go over your options, and he'll find you a house. Thanks, guys.